Hello everyone! Bitcoin recently pleased many investors by reaching $21,000. But what's really important is that right now we are in a period that previously often preceded the explosive movements of its price. What does all this mean for the cryptocurrency market? And has Bitcoin finally woken up? Today I have prepared a crazy technical fundamental analysis of the first cryptocurrency. Also, as a bonus, I will share with you my personal indicator that has been going crazy for a while now. And we begin. Guys, over the past few weeks, many retail investors managed to get bored watching Bitcoin's volatility decline. But fortunately, it has pleased us with a 30% increase, and we're now back above 20 grand. But why is it so important? Let's look at this chart as an example, since Binance has the most liquidity at the moment. And so, as you can see on this screenshot, we broke through a fairly significant level from a technical point of view. This is the 2017 peak, a slight stop in 2020, and the current year's price support level. If we additionally turn on the VPVR horizontal volumes, we will find a surprising concurrence between the aforementioned and the red line of this indicator. It shows the exact place where most transactions were made. Accordingly, it makes sense to protect this level for both major players and ordinary traders. Since we were able to get above 20 grand, it is now essential to stay as high as possible, after which we can keep moving further. But for this to happen, you need reasons, and we're going to talk about them right now. Alright, let me start with my personal indicator first, and then move on to the technical analysis and fundamental basis. I think that would make the most sense. As for my indicator, it's not a 100% guarantee. First of all, it should be used together with other tools and taken into account only as an additional reason to make a more weighted decision. As you can see from this chart, the indicator gave only 4 signals during the whole time, 3 of which marked the bottom, and the 5th signal showed up only now. Surely there was a false warning in June 2020, as the asset dropped the last 50% in 4 months. But there is a very important nuance here. The longer the indicator draws the red zone, the more likely such a range can be considered the bottom. And at this point, it is the biggest red zone of all time. In addition, the blue MACD crossed the orange signal line from the bottom up. Such a crossing exactly in this red zone tells us that we are now very close to the bottom, and probably have already passed it by starting a new cycle. Now, let's take a closer look at the technical fundamental indicators, which should help us understand if this is really the case. Or will it all be different this time? Folks, we'll talk about all of this in a few seconds. In the meantime, please give this video a thumbs up and hit the subscribe button. We continue. And so, as you already know, a few weeks ago, we did manage to break through the global bear resistance that began on November 8th, 2021. 3 times the price deviated from this level by sharp drops, namely 50, 63, and 27%. But now the price is free of pressure. Of course, that doesn't mean at all that an asset can't fall right this minute. No, instead, I'd say the price will remain roughly in this area for a while longer, continuing to rise and fall while completing the formation of a solid takeoff platform. Do I really believe in such a scenario? Yes, and I'll tell you why. Looking at how the vertical volumes have increased compared to last time, you can see 2 very positive factors. For the first time in a long time, large volumes appeared on the market, which hints at a certain interest of the players in such levels. In other words, they're willing to buy at current prices. Secondly, every cycle bottom has a spike in volume, where retail investors rush to sell in fear, and smart money exchanges their money for bitcoins. Now look over here, the RSI has already touched the bottom of the range, therefore indicating a strong oversold for this asset. In all this time, the weekly RSI has only bottomed 4 times. Not always perfect, but it worked. Afterwards, retail investors could watch the first cryptocurrency's crazy price rally and huge profits in their portfolios. But should we expect history to repeat itself? Even though cryptocurrency is known for its high volatility, the holiday break was exceptionally quiet. Similar cases are marked in blue on the chart, and as you can see, for the most part, the coin has soared to new heights. But to repeat such a scenario, we need to see at least 3 reasons that will trigger a new bull run. Number 1 is an increase in online activity. 2 is attracting significant institutional capital flows to the blockchain to renew demand for Bitcoin. And the 3rd is the increase in demand for Bitcoin blockspace. A short-term surge in new Bitcoin addresses occurred just after the FTX fiasco, but after a while, the average monthly red line of new addresses is almost back to the average annual baseline blue level. This indicates that network use has not yet reached a convincing and sustainable recovery. Next, concerning institutional capital. At this point, large transfers fell from 33 to 19% dominance. This suggests a significant lull in institutional-scale capital flows, and perhaps a severe confidence undermining among this cohort. Unfortunately, this may also partially reflect the crowding out of questionable capital flows associated with FTX and Alameda research. And lastly, this is the demand for Bitcoin block space. All I can say at this point is that it keeps being weak, with little upward pressure on the Bitcoin commission market. The 4-year figure for miners' earnings has not yet showed to noticeable progress toward positive territory and remains on a negative deviation. What do we have as a result? Many metrics and indicators pointed to a complete reset of Bitcoin and the entire crypto market. The strongest coins survived many bankruptcies of projects and even companies. Despite fears of a worsening global economy, all the terrible events are already priced in. This is why, summing up all of the above, I'm optimistic about this year and next year. And that's it for today. Thanks for watching. See you later.